So I feel the CFO's role is also to be a bridge between the investors and the people who actually manage the business. And I gave that example of Ganesh. So the bigness of the stomach also comes into play, that some of the shocks that the businesses give, the finance function and the CFO must be able to absorb that through better management of certain lines in the profit and loss account, as also better phasing of various expenses across various quarters. Typically, when businessmen or CEOs or CXOs, they analyze business, typically I feel people stop at EBITDA. I think life ends at EBITDA, right? Which to the Munimji in me is not acceptable at all, because below EBITDA there is interest, there is income tax, there is depreciation, and having finished profit and loss account up to the profit after tax level, there is the balance sheet. So the CFO typically should end up owning the lines below EBITDA and the balance sheet. At least I recall that in the finance function goal sheet, or even in my individual goal sheet, there would be goals that I would take in terms of taxation, both direct and indirect tax, as well as interest, as well as depreciation, because if the CFO is smart, you can legitimately use various accounting techniques to look at what depreciation number you want. Actually, there is a bit of a cliched joke about a CFO being recruited, and the CEO wanted to test the candidates. So he kept asking candidates one after another, what is 2 plus 2? And the candidates would immediately answer 4. Until one guy came, and when the question was asked to him, that candidate went to the door, closed the door, came back and asked the CEO, कि आपको कितना चाहिए? Okay, so forget the corny part of this joke, or it suggests that you can do some hera-fairy. I'm not talking about that. But I feel if the CFO is creative and takes up a challenge, you can say that yes, the businesses do have this challenge and the investors want this. How can I bridge the two?